is up, everybody? This is Stock Market Education, and today we're going to be talking about what 5G is and the best 5G stocks to buy for 2020. Let's get into it. Before we get into the top 5G stocks, let's talk about what 5G is for a moment, because it's important to understand how the technology works before we invest in the companies. 5G is the next generation of broadband that will increase the speed of phones exponentially. 5G is 100 times faster than 4G. It's not even in the same ballpark. Data is transferred through frequency, and the higher the frequency, the faster the network connection. Pretty simple. There is one downside to increasing the frequency, and that is the distance information can travel decreases significantly. The travel distance for 4G is about 10 miles, while the distance for 5G is only 1,000 feet, or 2% of 4G's distance. The way people overcome this problem is pretty much by blanketing entire cities with 5G outlets for every 1,000 feet. 5G exists, however, it's select and there's a lot of runway for the networks. With that being said, let's take a look at a dividend stock in the 5G sector, which is Verizon, ticker symbol VZ. And Verizon has already put 5G outlets in 31 cities in the US and plans to install a 5G outlet in San Diego next. This is a pretty big head start when you compare it to AT&T's 12 cities, and even more impressive than Sprint's 5G network of 9 cities. Verizon is currently trading at $56.40, and you can see that they have a PE ratio of 12.11, which is pretty low compared to the S&P's PE ratio of 22.94. In addition, you can see that they pay a very nice dividend yield of 4.29%, as well as has a one-year price target estimate of $61.79. And they have a payout ratio of 52.37%, which implies that Verizon will have no problem paying out the current dividend. Overall, Verizon is a safe dividend stock within the 5G sector. Another stock that is probably the most interesting stock in the 5G sector is Teledyne, ticker symbol TDY. And Teledyne is a technology company that creates devices that tests and measures 5G connection. Teledyne is currently trading at $360.61, and they have a rich PE ratio of 33.59. However, Teledyne is a growing technology company, so a PE ratio of 33 is pretty in line with market standards. You can also see that Teledyne doesn't pay a dividend, and they have a one-year price target estimate of $400 per share. Over the past 4 years, you can see that Teledyne's revenues increased from $2.1 billion in 2016 all the way up to $3.1 billion in 2019 for a percentage increase of 47%. Not bad at all. And if you scroll down, you can see that it says like and subscribe for the YouTube algorithm. It also shows that their net income has increased from $190 million all the way up to $402.3 million for a percentage increase of 111%. Very impressive. Overall, I think Teledyne is a compelling growth stock within the 5G sector. The third and final stock for this list is a stock called Qualcomm, ticker symbol QCOM. Qualcomm designs and sells telecommunication products, and you can see that Qualcomm has a PE ratio of 22.52, which is in line with market standards, indicating that Qualcomm is fair value. And you can also see that Qualcomm pays out a dividend of 3.17%, which is probably not going to increase more in the future because they have a payout ratio of 70%. You can also see that their sales percentage is expected to grow from 14.8% all the way up to 24.1%, which is a big increase in sales growth. In addition, their earnings per share is expected to grow from $3.54 per share all the way up to $4.19 per share. Overall, Qualcomm is a steady stock in the 5G sector that has a lot of potential for upside. Thank you guys for watching the video. If you liked the video, click the like button and subscribe, and have a good day. Bye.